The U.S. economy is in a bigger bubble than before the 1929 Great Depression. Here's what that means. What does it mean? It means a once-in-a-century financial storm may be approaching. Friends, let's talk about something serious but crucial today. Ray Dalio, founder of Bridgewater Associates, recently warned that today's financial markets are even riskier than they were before the 1929 Great Depression. When a veteran with decades of market experience speaks like this, we ought to listen carefully. Why the situation is so severe? The current U.S. stock market bubble is the largest in 120 years. That number might sound abstract, but think of it like a balloon stretched so thin it could pop at any moment. But this time, the problem isn't just the financial markets. It's amplified by other complex factors. The wealth gap is nearing 1929 levels. The top 10% of Americans now control nearly half of the nation's wealth, a level not seen since just before the Great Depression. It's like most of the air in a room is being breathed by a handful of people, while everyone else struggles for oxygen. When this continues, the entire economy becomes more fragile. Then there's the debt problem. The U.S. government is like a consumer who's maxed out their credit cards, and lenders are growing hesitant. Even Japan, long one of America's most reliable creditors, has been significantly reducing its holdings of U.S. Treasury bonds. That's an unusual signal, like your most trusted friend starting to keep their distance. Echoes of past crises. Dalio's analysis highlights several historic crises: the 1929 Great Depression, the 1971 end of the gold standard, the 2000 dot-com bubble, the 2008 financial crash. Today, we're seeing key traits of all these crises emerge at once. Financial markets detached from the real economy, tightening liquidity, sky-high leverage, rising social tensions. It's like seeing storm clouds, lightning, and strong winds all gathering before a hurricane. So what can we do? Stay calm. Financial markets are like the ocean. Tides ebb and flow. The key is keeping your balance. Look to traditional safe haven assets like gold. Throughout history, people have turned to tangible assets in times of uncertainty. Manage expectations. Dalio's research suggests nominal returns may remain low over the next decade. Avoid chasing unrealistic gains. A final word. Before every crisis, there are always those who say, "This time is different." But history reminds us, economic cycles change like the seasons. After spring comes winter. What matters is reading the signs and preparing in advance. For ordinary people, the best response is to keep a clear head. Don't be swept up by market euphoria or panic. Learn how economic cycles work. That's how you stay steady when the storm hits. I know this is heavy stuff, but it's the truth. If you found this helpful, feel free to like, save, or follow for more valuable insights. In an age of information overload, real knowledge is more important than ever. One last thought. In financial markets, survival is more important than speed. Follow for more clear-eyed analysis.